So this was kind of like a quick study that I did, but I found the results to be kind of interesting. I think some of you guys are going to see why in a minute. But okay, so the S&P grew by 22% over the past year. So since last February, it's grown about 22%. Pretty hefty year, to be honest. So just if you had to guess, what percentage of the S&P's components do you think outperformed the market?
10%, 50 stocks had the higher return at 22.3%.
Interesting. Okay, that's a lot lower than what I would have guessed. I would have guessed 50. I'm like, okay, right, like market efficiency, all that. If I randomly pick a stock in the S&P 500, there should be like about a 50-50 chance of it doing better than the market or doing worse than the market, right? I would kind of assume that it was a coin flip, right?
Yeah.
Or at least that's how I think about it. We're going to find out. Also, Nick is guessing 15%, a lot lower than I was expecting. My intuition was closer to 50%, but only about 26%. 26.5% of the components actually beat the market. So my expectations, Brandon got it right. About a quarter of the components in the S&P 500 actually beat the S&P 500, which from my expectation, I'm like, it should be a lot closer to 50%, I would think. Because you want if 25% of the components are not just propping up the market, but accounting for the losses of the other components to such an extent that we can have a 22% rally in a year, for me, that is a little bit concerning. And I think we can see a couple very big outliers to the upside. We could probably take a guess on what those are. But here, just for context, we're looking at cumulative percent change. So that black line in the middle is the S&P 500. And then some of these lines very much to the upside are some of their index components. This doesn't take the weights into account. So even though this one line might have moved an awful lot over the last year, we can't necessarily tie that to some kind of market performance yet or attribute it yet, right? But we can still take a look at, if you randomly picked a stock in the S&P 500 and held it, your probability of beating the market is very low, because beating the market just by picking a stock is very difficult to do. For this, though, it was a lot. I thought it was going to be a lot closer to 50-50. That was, I guess, my own intuition, though. Pretty low. So when people talk about being really good stock pickers, you got to be a really good stock picker, because the thought of doing this consistently seems pretty unrealistic. But what I wanted to do is kind of take a look at some of these outliers. If you want to guess, let's take a guess. Also, chat can guess. Okay, I looked at the top 10 components of the S&P 500, the top 5 performers, as on a percentage basis. So if you guys can throw out your guesses, can you guess what those top 10 are? Some of them should hopefully be pretty obvious. Not as many of the Mag 7 as I would expect. So again, oh yeah. So
Uber, AMD, Broadcom, Eli Lilly. Damn, no. It was way wrong than I expected.
Well, you got a lot of them right. So NVIDIA grew by 2. Again, remember that we're looking at a percentage basis. So this is the amount that they've grown as a percentage since last February, right? NVIDIA is up over 200%, 212, which is a great number, by the way. Meta's up 162%, 162% in the last year. We have AIG, we got Palo Alto Networks, actually, we were just talking about that, up 120%. We got Eli Lilly up 115, AMD up 100%, Uber actually up over 100%, and then a couple of other components in there. So not as many as the Mag 7 as I was expecting.
No, definitely not. Eli Lilly, forget about that.
Forget about that. Apple's Apple's up 24%. So it actually is pretty on par with the market in terms of the growth over the past year.
I also forgot about Arista Networks. That was one of the stocks I actually used to trade.
Yeah.
But that's been also on a tear to the upside, and it's also one of the main ones for cybersecurity as well.
Oh yeah. Builders First Source Incorporated really has been nice because it's been a steady climb versus volatility. Yeah, some of these other ones as well. Have been doing just kind of more gradual growth. But yeah, on a percentage basis, NVIDIA is dominating. Which is not surprising to anybody, but Meta actually, compared to the rest of the Mag 7, actually really outperformed some of these other ones. Where Apple was let's see, Apple over the past year is, up 24%, so just about on par with the market. We can maybe take a look at Tesla, for example. Tesla's down 25%, so and Netflix maybe we can throw in there as well. What's Netflix doing over the past year is up 52%. But we're talking about on the order of 100%, 150%, 200%. So really big movers in the S&P 500. This is going to be a little bit harder. Do you want to take a guess as to what the worst performing components were?
Square, PayPal. It's a hard question, Julia.
I know it's harder than the ones to the upside. Good guesses. I like these guesses. Some smaller names. We actually have Enphase Energy down 43% on the year. We have Etsy down 46%. EL, which is I'm pretty sure like Estee Lauder, right? Which is a cosmetics company. Yeah, Estee Lauder. And then ALB. What's ALB? ALB is Abermail, which I have not heard of. FMC, which I have not heard of as well. FMC Corp. Which does chemical manufacturing. But I think some of the bigger names, you have Enphase Energy, you have Moderna, where it has fallen from great heights. Moderna has fallen from great heights. This was a crazy grower a couple of years ago.
Pfizer's not there.
Sorry. Yeah, they made a lot of money with COVID, but since then have kind of dropped off. They're actually one of the worst performers in the S&P 500. We have DG, Dollar General, which we've been talking about quite a bit. And then Paramount Plus, which I don't like their streaming service. So I'm not actually very surprised about that. And then VFC, some of these other names I haven't really heard of, like VFC is a global apparel and footwear company. But like some of these other names, there's some names in here. It is a mixed bag of nuts. I think looking at this question or like answering these questions a little bit harder because we do tend to pay more attention to sort of the companies that are doing explosive growth, like some of the others we looked at. I think Moderna is the one that I'm the most surprised about, to be honest.
I did not got anyone correct.
Well, yeah, that was a much harder question, to be absolutely fair. And then there's some other ones like VFC, for example, like probably one like that most people don't pay attention to. Some of their subsidiaries include Vans, the North Face, Timberland, Supreme, Dickies. So some of these other like more retail companies, it's consumer discretionary companies for the most part. So kind of like smaller, more smaller, less highlighted companies, I guess, or less in the spotlight. But definitely some big names in here, and I think Moderna is the most surprising. Just kind of wanted to look as well at the daily volatility of some of these stocks to show like just how much more volatile they are than the market. Which, I mean, to be fair, like we're looking at on the order of like 2 to 3 times more volatile just on a daily basis than the market. But I don't even think that really shows the scale for how much some of these are moving. When I looked at this, and I also looked at some of this volatility, it did make me a little bit nervous, right? Because it really is like if 26% of these companies they're not quite like driving the market, but they're accounting for the losses of the remaining 75. Like if one of these companies fails for whatever reason, could be corruption, could be a change in regulation, whatever, like that makes me nervous about the health and the exposure of the overall market, especially given the sheer amount of growth that we've seen. So someone in chat was saying like, oh, maybe mean reversion. I feel like correction for sure. I feel like we've been feeling this for a while at this point and it hasn't quite hit yet.
It's going to be a rug pull.
Yeah, it very well could be at this point. I don't even know anymore, but it's just really unprecedented amount of growth for things to be so skewed like this, especially when a lot of these companies, they do have similar sector exposures. You have like NVIDIA and Meta and Palo Alto Networks, AMD, a lot of tech exposure, a lot of some, exposure to the semiconductor space, which again, kind of makes me nervous about the health of the overall market. And I know that you were talking about maybe the, what would you call that? The appeal of lower cap companies compared to tech stocks at the moment. I think you could make an argument for that, right? Because when you look at this graph, like you could say like, okay, these tech companies are raging in terms of like getting upside as an investor for like more speculative investors. There might be more potential in those small caps, right? Those stocks that haven't quite popped yet. But at the same time, your chances of succeeding with that type of strategy are low. Or not really succeeding, but your chances of beating the market in a reasonable amount of time are low. Like you got to be in the top 25% of guesses pretty much in order to get that right. And you can supplement that with other styles of investing. But I think either way, that's definitely kind of a more speculative, a little more risky way of investing. But I think you can make the argument. It's just one that, at least statistically, I think is less likely to succeed. Just for fun, I did a little PCA of those top, performing components. I did take out AIG because that was such an outlier that it skewed the whole graph. So this is kind of what I saw so far. And again, we're remembering that we read distance differently on this type of plot. That first principal component axis where we definitely see the second principal component axis where we see these assets spread out a little bit more, that carries less weight compared to the bottom one. There's more volatility, captured on that bottom axis compared to the vertical one. So distances across that axis are going to mean a lot more, but still, they're all kind of clustered together. We can still see some of that spread on, the less relevant axis, I guess. And then when we're looking at the components that kind of have like the most divergence from the market, which is SP 100 is the one that's labeled 0. We can see that NVIDIA and AMD are kind of in their own universe. We got Palo Alto Networks and Broadcom is Avgo, right?
Yes.
We can kind of see them a little bit closer to the market, but still like a little bit spread out. And then sort of on that vertical axis, we can see that ANET, BLDR, some of the, like those smaller names are a little bit further away. So from, I guess, a diversification perspective, or from a perspective of like looking at these different risk profiles, I think it just shows how, like, hopefully it shows how on another planet NVIDIA and AMD have been over the past year. Does make me a little nervous having like market exposure to those very volatile elements and having so much exposure to tech and chips and semiconductors and all of that. But either way, hope you guys found that interesting. I certainly did. So those results certainly surprised me. So thank you guys very much for watching.